Dear Chair, ladies and gentlemen, dear representatives from the media, it is my honor and great pleasure to take active participation of the second conference of Europa RE. I am involved in the Europa RE project since its beginning, and Insurance Supervision Agency from Macedonia was one of the host institutions who organized the first regional conference of Europa RE. Disaster events continue to generate increasing financial losses alongside ongoing economic development, population growth, and global urbanization. Climate change leads to increasing frequency and intensity of extreme weather events. According to the Stern Review on the Economics of Climate Change, the cost of climate change could increase to around 20% of global GDP by the end of this century. Along with local prevention and mitigation measures, insurance is a powerful measure to strengthening resilience against catastrophic events. Losses from natural catastrophes are on the rise. Annual insured losses from weather-related events have jumped more than five-fold over the last 40 years, from $5 billion in 1970s and 80s to $27 billion in the last 20 years. However, this graph shows the development of insured and total losses over time, and you can see that the difference between the two, which is the level of uninsured losses or protection gap, has widened over the last 30 years. The wide gap between economic and insured losses caused by natural disasters places a significant burden on the public sector and ultimately uninsured individuals and businesses. Southeastern European countries are not immune from the catastrophic risk events. They are significantly vulnerable and exposure to natural disasters, especially on earthquakes and floods. In the last 30 years, reported economic losses from the natural disaster exceeded $70 billion, according to UNDP, UNISDR, and the World Bank. Let me share with you some of the numbers. In the case of the Republic of Albania, in the period 1974-2006, $2.3 billion loss caused by floods, earthquake, and drought. In Macedonia, the earthquake in Skopje in 1963, leaving more than 130,000 people homeless and making total economic damage estimated at $1 billion at that time. Floods from 1962 and 1979 resulted in economic losses of 7% of the domestic GDP. Over 50% of the territory in Serbia is vulnerable to earthquakes of magnitude 7. This year, floods in Serbia are estimated from 1.5 to 2 billion euro economic losses. Furthermore, the projection about the future catastrophic risks that might be happen, predictions are the following. World Bank estimates that temperature increase by 1.9 degrees from the average annual value by 2050. United Nations project shortage average precipitation will decrease by 5%. During of summer periods, precipitation is expected to fall by 70%. Also, it is expected increased use of pesticides and disease of crops, shortage, water, and food. In the case of Republic of Macedonia, the estimations are following. The probability to occur earthquake within 50 years is 10%, which may cause economic damages that can exceed 3 billion euros, of which the households alone would suffer damages exceeding 1 billion euros. Flood with a return period of 250 years likely to occur once in 250 years, can cause economic losses in Macedonia which can reach about 900 million euros, of which the households alone would suffer damages exceeding approximately 250 million euros. Extreme droughts could be repeated every 3 to 4 years and may occur on more than 40% of territory of Macedonia. We are aware about the existing cat risks, and all of us have responsibility to looking for risk financing schemes. Insurance is one of the most important and efficient risk management tool. But in the CE countries, the level of insurance market development is very low. Here you have some data related with the insurance market main development indicators, and you can see that insurance penetration and density rate in the case of Albania, Macedonia, in Serbia shows that those markets are one of the smallest in Europe. From the other hand, we have very high competition in the non-life insurance sector, and with a very strong presence of the foreign insurance groups. The share of the property insurance in the total volume of business is more or less on the same level. In the case of Albania, it's 23%. In the case of Macedonia, it's 18%. In the case of Serbia, it's 21%, which show us that the property insurance is not very much developed and doesn't have the main role into the insurance sector. Moreover, this is the data only for Macedonia. Only 3.5% of the non-life premiums refers to cat risk. In terms of number of residential that in Macedonia, only 0.24% of the household have earthquake insurance, or only 0.14% of the household have flood insurance. This is the number of insurance contract divided by the number of residentials in Republic of Macedonia. All these numbers show us the very low level of development of the cat risk insurance. Who are the main factors for this situation? Of course, the low level of insurance penetration, lack of supply for risk diversification, lack of supply for standalone catastrophic insurance product. A relative small country, such as Macedonia, with limited opportunities for risk diversification and large accumulation of risk in the major cities. The cost of the combined policies, which may include risk of flood and earthquake, are high. Limits of insurance policies for flood and earthquake are usually quite limited to a small percentage of the total insured value of the policy for householders. There is a lack of awareness among the majority of the population about the risk of natural disasters, which are based on misconceptions like disasters are far from us or it will not happen to me. Perception that the state is the only solution for absorbing the risk effect, although in the event of major disaster, the allocated budgets are not sufficient to offset the damage. Lack of appropriate risk modeling to map catastrophe risk exposure and provide sound product pricing, or in general, not adequate catastrophic insurance risk management is another factor. Lack of available and affordable alternative risk for risk transfer, such small volume of business to attract reinsurance companies and high cost of reinsurance premiums from international companies are additional factors. Taking into consideration all these aspects that I mentioned, it is obvious and more than needed the necessity to develop insurance mechanism to increase the resilience on the countries of Southeastern Europe to climate-linked natural disasters. World Bank initiated program based on public-private partnership known as Southeast European Central Risk Insurance Facility, which output is Europa. The main vision is to increase the level of catastrophe insurance penetration among households and small and medium enterprises in Southeastern Europe. The main benefits and opportunities from this project for the insurance industry should be dedicate reinsurance coverage for all business written through the web-based production platform and suggested Europa minimum technical rates. Through its ability to pool catastrophe risk regionally and economy of scale, Europa has been able to achieve high competitive retrocession pricing, which will translate into immediate tangible benefits for the partner insurance companies. Insurers are expected to increase their revenues through the sale of properly reinsured, technically sound, well-designed, and actually priced catastrophe and weather risk insurance product to homeowners, SMEs, in the agricultural sector. Considerably reduced administrative expenses in processing policy sales and managing the risk of catastrophe insurance products is another benefit. By utilizing innovative technological solutions, insurance companies will be able to reduce considerably their internal cost of doing business in more complex product lines like earthquake, flood, and multi-peril weather risk products. Improved credit quality of insurance product. Through access to a web-based production, pricing and underwriting platform and risk management tools, participating insurance will be able to offer high credit quality insurance products backed by Europa reinsurance capacity. Minimum credit quality standards for all program endorsed insurance products will contribute to improve consumer confidence in catastrophe insurance policies, resulting over time in higher demand for such products. Efficient, reliable, and fast claim settlement process is another benefit for the local insurance industry. Participating companies will benefit from the claims management system, which will ensure a much shorter claims processing time, along with the major savings for participating insurance. The new claims management system is also expected to increase consumer confidence. The development of a mass market in catastrophe products will require considerable enhancement of internal risk management practice and standards for most insurers. Insurance, in partnership with Europa, will benefit from world-class expertise in risk-based supervision and catastrophe risk management. Moreover, insurance will be able to receive custom-tailored expert technical support in overhauling their risk management operation and ensuring their compliance with the forthcoming risk-based supervision requirements for catastrophe risk exposure management. Ladies and gentlemen, let me inform you about the most important implementation steps in Macedonia regarding to the Europa development project. Insurance Supervision Agency, the regulatory body of the insurance industry in Macedonia, is appointed as implementing agency. In addition to the main mission statement of Insurance Supervision Agency to protect the interests of policyholders, in our national insurance supervision law is stipulate provision which give power to Insurance Supervision Agency to be active on promotion to the insurance market development. In that respect, the government of the Republic of Macedonia delegate the Insurance Supervision Agency to be the implementing agency. Insurance Supervision Agency serves as focal point of the Europa consultants and World Bank missions in assessing the insurance market, initiating and organizing numerous meetings with stakeholders and regulatory workshops. In this occasion, I would like to express great thankful to my team, led by Mr. Darko Blaževski, who is the head of the Unit for Research and Development, Slađana Milković, actual appointed actuary from the Insurance Supervisory Agency, and Marina Smileska, also from the Unit of Research and Development. In March 2013, Europa Re representative office was opened. The main objective of this office is to ensure ongoing presence in the local insurance market and maintain ongoing dialogue with key government stakeholders in Macedonia. The representative office will also enable the country teams and European management to work closely with the local insurance partners. Another major step is the beginning of the training workshop for insurance agents and personnel of the local partner insurance, which started in April 2014. The main objective of this specialized training was to equip the insurance agents with adequate know-how and expertise on the new insurance products. In April 2014, the first property catastrophe insurance product was launched, which covered damages caused to property and contents by earthquakes and fire following the earthquake and flood. Last month, the first innovative agriculture yield index insurance product was introduced. Agriculture yield index insurance is designed to protect farmers from the loss of crop yields due to the adverse weather events and biological risks. This product is an excellent form of coverage for systemic risks such as drought, frost, windstorm, excess rain damage, high temperature, and catastrophe flood, which have huge impact over a broad area. We are very happy about this innovative agricultural insurance, especially when we know that the agricultural sector, in the case of Macedonia, is one of the most important strategic economic sphere, because 10% of our domestic GDP is it's coming from the agricultural sector. Last month, the full-scale PR and marketing campaign has started with the following goals: to build up public awareness about the natural disasters by explanation of the potential disaster effects that natural catastrophes could exert on citizens' livelihoods and businesses, including the entire socio-economic environment. In addition, the CAT Monitor is a focal communication tool was launched. CAT Monitor tool is a free public access for immediate assessment of property risk exposure to earthquakes and floods. For the marketing activities, is used different range of communication mix, such as messages aired on various radio channels, advertisement in print media, billboards through the country, online advertising via web banners leading to CAT Monitor website, brochures distributed by the partner company, organized forum for presentation to farmers with strong support provided by the Macedonian government, and PR activities via media briefings with journalists, interviews via radio, TV, and print media. One of the most important aspects, which will be in line with one of the main mission statements of the regulatory authority, is the implement proper regulatory environment. We, as a regulatory authority, want to assure that a catastrophe risk insurance should have enough capacity to be able to face the probably maximum loss expected to arise from a large catastrophe event. Currently, the sole tool in order to assess the solvency requirements of an insurer according to the insurance supervision law, which represents Solvency I regulation, is the calculation of the solvency margin based on a premium and claims method which obvious is not suitable for measuring capital requirements for CAT insurance. Apart from this, there are no additional requirements on the aggregate net retention of insurer on catastrophic risk, which impact in high risk concentration relative to insurance surplus. In this regard, following the proposal of Europa Re, and in order to ensure minimum requirements for a proper catastrophe insurance risk management, the Insurance Supervision Agency considers bringing a new regulation specifically intended to cover the issue of risk aggregation and solvency capital requirements of the cat portfolio of the insurer. The proposed regulation incorporates methodology which is based on the methodology proposed in the cat model from the Solvency II standard formula. The purpose of the regulation will be to constrain the maximum level of aggregate risk rotation related to natural disaster insurance depending on the risk undertaking, the financial strength of the company, as well as the reinsurance cover. In the end, let me share with you who will be the further challenges in implementing the Europa project. At this moment, we have limited participation on our local market. We have to continue with increasing the public disaster risk awareness and knowledge. We have to think on introduction of alternative insurance distribution channels. Then we're expecting that the World Bank will continue by expert support to strengthening the regulatory capacity, expanding the agricultural insurance premium subsidies, because one of the most important aspects in this project is to increase the agricultural insurance because of the importance of the agricultural sector to our national economy, and to think, because there are some pros and cons, for introduction of mandatory property insurance for residential against earthquake and flood risks. So thank you very much for your attention. And unfortunately, I have to leave.